Oil prices jump as the US military moves into place for possible strikes on Iran. Brent crude gained 4.3% on Wednesday after talks between the US and Iran in Geneva appeared to make little progress. Iran is hoping a deal over its nuclear program could mean sanctions against oil exports are stopped, but it also partially closed the Strait of Hormuz earlier in the week in a show of its control over the region. About a third of the world's seaborne oil goes through the strait, making oil traders very nervous. Homayoun Falakshahi is a senior oil analyst at Kpler. Homayoun, how are traders trying to price the possibility that the strait could be cut off for any period of time?
Hi, Lena. I think it's very difficult right now for traders to, exactly price the potentialities around US-Iran tensions, but I would say that it's very risky to be short in this market. Obviously, we've been moving towards a relatively narrow range, with the top being around 70, 71 for Brent and the bottom being around 65, 66. So we may continue to stay in that narrow range until there is the next catalyst that could take us either up or down.
Would some kind of compromise between Iran and the US over the nuclear program calm markets, or are you expecting them to stay volatile?
No, I think yes. One day you hear something, more positive news on the sense that we could be closing in on a deal, and then the next day you have the opposite news. So I would say that the market is very nervous and is reacting to any kind of headline. And so, yes, exactly. I think that short-term volatility in that narrow range is going to remain very high in the next few weeks.
Would any reduction of US sanctions on Iran lead to a significant amount of new supply reaching markets?
Not necessarily a lot more supply. We do actually believe that Iran could be producing in the short term about 200 to 300 KBD more. So in a matter of, I would say, 2 to 3 months would be enough for them to increase production. So it's not that much more production, but it's more about the way and the end market for that crude that I think it gets interesting to look at. It's a bit like the Venezuela scheme, I would say. If you have a scenario where there is a deal, or even if you think there is a scenario where the US attacks Iran and manages to get through a regime change, and then what happens after that. And I think it's going to be more a reshuffling of that crude away from China and more towards other markets such as India and Europe.
Well, the other open geopolitical question hanging over oil markets is, of course, Ukraine and Russia, where no progress appears to have been made in talks this week. But is increased sanctions enforcement meaningfully cutting into Russia's oil earnings?
I think it is. The sanctions are having a huge impact on Russia because on the one hand, they are losing some market in India, especially. India used to import 1.7 million barrels per day of Russian crude. It dropped to about 1.2, 1.3. But we think that with the US-India trade deal, it's more likely going to drop further, closer to 1 million, even maybe under that 1 million barrel per day threshold. So it's a lot of volume in the Indian market. To an extent, China has replaced India. China has been buying a lot more Russian crude. We've seen imports of Russian crude into China hit a new all-time high last month in January. But it's not a one-for-one replacement, I would say. We've lost 500 KBD in the Indian market, and China has about 300 KBD more. So Russia is still losing in terms of volumes. But above that, more importantly, it's increasing its discount for its crude, both in India and China. That discount has really widened. We're now talking about a discount of $10 per barrel against Oman, Dubai in India, and against Brent in China. And so on the one hand, you have lower volume being exported and higher discounts. So we could say that the Russia's oil revenues are effectively being squeezed in the short term, mainly due to US actions.
Do you think this rise in the price of Brent is going to encourage OPEC Plus to pump more in Q2?
I think so. I think what has been happening and where prices have been headed, despite the fact that we still see oversupply, even that oversupply in the short term has been a lot less important than what we initially thought 2 months ago, and that's mainly due to disruptions, in the likes of Kazakhstan. We've also had the deep freeze in the US, curtailing production for a few days. So that short-term tightness has supported prices on top of obviously all the geopolitical risks, and this, we think, will comfort OPEC Plus to resume its production hikes from potentially from Q2 onwards. We think that it makes sense for them to do so between April and September, when you have a rise in domestic demand within OPEC Plus 2, because most of that incremental barrels will actually be consumed domestically, and that means that the balances will not be that long, at least until Q4. So we think that yes, OPEC Plus will very likely resume its production hikes from April onwards.
That was Homayoun Falakshahi of Kpler. Don't forget you can watch more videos on Reuters.com.